A year ago, devastating wildfires ripped through parts of Los Angeles. But after the smoke cleared, a totally different story started to unfold. It's a story about who leaves, who moves in, and how a whole community gets reshaped right from the ashes. So, what really happens after the news crews pack up and go home? Well, let's follow the money and see how a disaster zone becomes a very unique and very complicated real estate opportunity. It all kicks off with this number right here. $46 billion. That is the absolutely staggering value of all the homes that stood in the path of the Palisades and Eaton fires. But as huge as that number is, the fire itself, that was just the first tremor. What came next was a real seismic shift in the area's financial and social landscape, and we're still feeling the aftershocks today. So, just how big was this fire? To really get why this opportunity even exists, we have to go back to the beginning and wrap our heads around the sheer scale of the destruction. Okay, this is not just a statistic. This number, it represents almost 20,000 families, every one of them with their own story, whose homes were suddenly right in the path of the flames. And these weren't just any homes, right? We're talking about neighborhoods where the median home value was already hovering somewhere close to $2 million. And this is the stark reality of what was left behind. An estimated 11,000 of those homes were just gone, destroyed. That's not just a loss of property, you see. It's a massive hole torn in the region's housing supply, and it created a vacuum that was about to be filled by a very new kind of buyer. For the homeowners who lost everything, the fire was only the first disaster. Seriously, what came next was this cruel twist of fate, a second crisis that handed them a really heartbreaking choice. See, here's the problem. California is right in the middle of a home insurance crisis. With the growing risk from climate disasters, getting coverage in these high-risk areas has become either insanely expensive or, in a lot of cases, just impossible. So even if you had the money to rebuild, you might not be able to get the insurance you need for a loan or even just to protect your new home. And this quote from a Redfin premier agent, Silva Kylian, it just captures the human cost of this perfectly. She said, for some residents, selling is the only option that makes financial sense. For so many longtime residents, especially, older folks or people who are underinsured, this was the harsh reality. Rebuilding just wasn't in the cards. Their only real choice was to sell the land their homes once stood on and try to start over somewhere else. So with so many homeowners being forced to sell, who was there to buy all this land? Well, all that pressure created this unique opening in the market, and it attracted a very specific and often very well-funded type of buyer. So it's the big question, right? Who is stepping into this vacuum ready to scoop up all these empty lots? Well, the answer, in a big way, is investors. And the scale of what they were doing is what's truly remarkable. Just take a look at this chart. That blue slice shows that in the third quarter of 2025, a massive 40% of all the vacant lots sold in these burn zones were snapped up by investors. A lot of them were cash-rich, which let them completely bypass the financing and insurance problems that forced the original homeowners to sell in the first place. And let's be really clear about what this land is. This isn't just empty space. A staggering 80% of these lots that investors bought, they were the former sites of family homes. This isn't just a land grab. It's a fundamental reshaping of the community, one empty lot at a time. Now, you'd think that with all this investor interest, these lots would be selling like hotcakes. But the market, it took another unexpected turn, and that led to a surprising new problem. Just look at these numbers. They're absolutely wild. In the Pacific Palisades, the number of vacant lots for sale exploded from just 7 in 2024 to over 300 a year later. For Altadena, it went from only 2 listings to 225. The market was suddenly flooded with land, way more than it could possibly absorb. So what happens when you have this glut of supply? Well, you get a slow, pretty uneven recovery. Despite all that initial investor excitement, lots are now sitting on the market for longer, and many are actually seeing price cuts. It's a clear sign that rebuilding these communities is going to be a way more complicated process than anyone expected. So what does all of this mean for the future of these neighborhoods? The displacement, the investors, this weird market glut, where is this all heading? So what's the bottom line here? Well, the recovery is slow. It's uneven. A significant number of the original residents, they've been permanently displaced. And now you have all this outside capital ready to decide what gets built and who gets to live there. So the real question is, will these iconic Los Angeles neighborhoods ever truly be the same? And that leaves us with a final, crucial question that goes way beyond Los Angeles. As climate-related disasters become more and more common, they don't just clear land, they create a blank slate. And maybe the most important question we have to face is, who gets to draw on it?